Let's get into the heart of why we're here and why people are listening. Let's get into investing.
Sure.
Let's say hypothetically, I have $3,200 to my name and I don't want to pay Ice Cube to sing me happy birthday on Cameo. What should I do with that $3,200 that I have saved up? Let's start the journey.
Well, starting there, clearly you have no priorities. But if truly you don't want to hire Ice Cube, then the next best thing is it goes into VTSAX.
What is VTSAX?
It is Vanguard's total stock market index fund.
Okay.
It means that you now own a piece of every publicly traded company in the United States. And everybody in those companies, from the factory floor to the CEO, is now working to make you richer. It's a broad-based, every company, low cost, because it's an index fund, investment. And that's all you need. You don't need all that complex stuff that Wall Street loves to talk about.
Okay, but I have a boyfriend or I have a girlfriend and they're telling me I should get a financial advisor. I have a cousin that makes a lot of money on Wall Street and they're saying I need to go to Morgan Stanley. What do I tell those people?
You tell them that you're investing in the simple path to wealth, which is low-cost, broad-based index funds.
Okay, so I open up my laptop.
Right.
I go to Vanguard.com.
Or Fidelity.
Okay, and then I just buy.
Right.
I transfer money over in my bank and I just buy
Absolutely.
that index fund.
Right.
VTSAX.
Absolutely.
And that's how many companies? It's like 3,600 companies.
About 30. So they're about, it varies, but it's virtually every publicly traded company in the country.
Okay.
And it's about 3,600.
Now, why are index funds so popular?
Well, first of all, they've become more and more popular. And I don't know that they're so popular. They're not dominant in the market. But because this is something that Jack Bogle created in 1975, that's when he started Vanguard. And he created the first index fund that retail investors, little people like us, could actually buy. And the idea was that the research had indicated then, and it's been confirmed over the 50 years since, that active management, which is paying someone to try to pick the stocks that are going to outperform out of those 3,600, typically doesn't work, and especially doesn't work over the long term. So research says active managers in a given year, somewhere between 25 and 30% of them will outperform the index. But you go out 5 years, that drops to, 10, 15%. By the time you go out 30 years, it's less than 1%, statistically zero.
Okay, so let's talk about this idea, but I just want to double click on that a little bit real quick.
Sure.
So Jack Bogle, this guy in 1975 has this theory. Hey, if you hold a large sum of these American publicly traded companies, you will see better returns than all those guys that you see in The Big Short and those fancy Wall Street brokers.